Light is Britain's far-right conspiracy theory paper spreading hate and vicious lies. No, that's what the BBC say. The Light is the only national newspaper bringing you the real news and informed opinion on what's really going on today. You can subscribe, order copies, submit articles, and read back issues on our website, thelightpaper.co.uk, and see for yourself why the establishment are so worried about the uncensored truth getting out to people every month. The Light Paper. Not far right, just right so far. thelightpaper.co.uk.
Scene script. Have you ever pondered the idea of financial independence and early retirement? The notion of not having to clock in at 9 or wrestle with the daily grind? Imagine a life where you're not shackled by financial obligations or a demanding job. It's not an impossible dream, but a reality for those who embrace the FIRE movement. That's financial independence, retire early. Consider the tale of Jane, a woman in her early 30s. Jane was an ordinary person living an ordinary life. She had a 9-to-5 job, a mortgage, car payments, and a lifestyle that was comfortable but hardly extravagant. And like most people, she dreamed of a life where she didn't have to worry about money. Jane decided to make a change. She began by cutting back on non-essential expenses, saving as much of her income as possible. She invested wisely, focusing on assets that generated passive income that didn't require her to trade time for money. Slowly but surely, Jane began to build her financial independence. She was still working, but she was no longer living paycheck to paycheck. She had a safety net, a cushion that gave her the freedom to make choices based on what she wanted, not what she needed. Fast forward 10 years, Jane, now in her early 40s, had achieved her goal. She was financially independent. She had enough passive income to cover her living expenses, and she no longer needed to work to survive. She was free to retire early, to spend her time as she pleased. Jane's story may seem extraordinary, but it's not unique. It's the story of anyone who has embraced the principles of the FIRE movement. It's a tale of discipline, of sacrifice, and of a relentless pursuit of financial independence. To summarize, the key points discussed today revolve around the idea of financial independence and early retirement. It requires discipline and sacrifice, cutting back on non-essential expenses and saving as much as possible. It involves investing wisely, focusing on assets that generate passive income. But most importantly, it requires a change in mindset. It's about seeing money not as a means to buy things, but as a tool to buy freedom. It's about understanding the true value of time and the freedom that comes with not having to trade it for money. This is the essence of the FIRE movement. It's not just about retiring early, it's about achieving financial independence, about gaining the freedom to live life on your own terms. Like Jane, you too can embrace the principles of the FIRE movement and embark on a journey towards financial independence and early retirement. After all, the only thing standing between you and your financial freedom is you.
Ever wondered how much you'd need to save to achieve financial independence? The answer lies within the mathematics of a concept known as FIRE, which stands for Financial Independence, Retire Early. The most essential number in your journey to financial independence is calculated by multiplying your annual spend by 25. Notice the emphasis on annual spend, not annual income. This calculation is based on the principle that you need £300 invested for every pound you wish to spend each month in passive income. Hence, your FIRE number is also your monthly spend times 300. This mathematical principle is founded on the 4% safe withdrawal rate, as defined by financial advisor William Bengen. He proposed this rate after analyzing the S&P 500, which typically produces an average of better than 10% growth per year when studied over a period of approximately 30 years. Bengen considered factors such as inflation and market volatility. After studying previous market activity, he concluded that a 4% rate of withdrawal per year would provide for a 30-year sustainable portfolio in the vast majority of cases. So to paint a clearer picture, if your monthly spend is £1,000, then your target for financial independence is 300 times 1,000, or £300,000. Alternatively, if your annual spend is £12,000, your financial independence target is 25 times 12,000, which also equates to £300,000. The first step in planning your financial independence, therefore, lies in understanding your monthly and yearly expenditure. Without this knowledge, it is impossible to take further strides towards your financial freedom. In summary, the mathematics of FIRE revolves around the principle of multiplying your annual spend by 25 or your monthly spend by 300 based on the 4% safe withdrawal rate. Knowing your monthly and annual spend is crucial in determining the amount you need to save to achieve financial independence. Armed with this knowledge, you can then plan your journey towards financial freedom. Remember, the journey to financial independence is not a sprint, but a marathon. Embrace the mathematics of FIRE and take the first step towards your financial independence today.
Good morning, guys. It's 7:59 on Monday the 10th of August 2026, and that means that we have completed 4 years and 19 weeks of this roughly 8-year FIRE journey, or FIRE experiment if you prefer. A quick look at the situation before things reset and the market opens. So the market closed at 109 on Friday, up 1/3%. You can see that represented by the fairly strong green candlestick on the chart there, but you might notice that the little green line is not actually at the very top of the candlestick, and if we look at the figures lower down, you will understand why. So if we look at the 52-week rolling high and low, the highest point seen was actually 109.56. So the market had actually closed higher on Thursday, I believe, and in fact it had not maybe closed higher, but it hit a higher point on Thursday than we currently have. The lowest point seen the last 52 weeks was 89.37. And just a quick look at where the portfolio is sitting. So the current portfolio value is 38,800. The return on investment currently sitting at 43%, up 2 or 3%, I think. And we have got 356 shares in the market with an average purchase price of 76.18. Before we have a look at the notifications, I just want to draw your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Ratio.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up, how'd you get on?
It's a draw. Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
We can go now.
Rude. You make Monzo Monzo.
Okay, I need to actually have a wee look at the settings on the Monzo advert. There should have been a bit of text along with it, and I see that there wasn't, but basically what the text should say is that there are affiliate links in the description for the video. There is one for Smarty Mobile, and the other one is for Monzo. Both companies that I use myself and I'm quite happy to promote. And if you do happen to use the affiliate links in the description, we will both get something from it. Read the terms and conditions for precise details. Okay, so the market has opened in the meantime with a slight rise, up roughly 2/5 of a percent. Let's have a look at the notifications. Biggest stocks before earnings: Berkshire Hathaway, Barrick Mining, Ferguson, Embraer, and Caspi KZ. The trade desk falls 21% after Q2 earnings miss expectations, and Airbnb up 8% on strong Q3 guidance and rising bookings across all regions. That sounds quite positive for them, and I don't know how they had been doing, but I suppose like most of the rest of the travel and tourism industry, they probably took quite a hammering during COVID and perhaps shortly after. So perhaps they are replacing some of those less than optimal, I was going to say prices, but yeah, well, I suppose it would be. Okay, let's have a look back at where we are sitting. So what was the highest high we had seen? 109.56, so we're still not up at that point, even with the market being up 0.4%. But nevertheless, this appears to be quite a strong turnaround from the little kind of hesitation that we had seen previously. It looks as though the market is marching upwards, at least at the moment. That could all change later today, but anyway, regular viewers to the channel will know that each week I buy £120 worth of the Vanguard S&P 500 exchange traded fund. Now, just to point out that these are theoretical pounds, in as much as what you're looking at is the practice platform on Trading 212. Whilst I do use Trading 212 for my own investment, I keep that part private. So at today's current market value, £120 is going to buy us just over one share, so 1.1 shares. Let's send that through. So the market is open. We're going to do this as a market buy. There are no stops or no limits or anything like that. We'll send it through. The order has executed, and we did buy 1.09 shares at 109.10p. If we have a little look on the right hand side, we can see that the figures have updated. The new portfolio value is sitting at 38,900. The return on investment virtually unchanged, just below 43%. And we now have 357 shares in the market with an average purchase price of 76.28. So that will be up slightly. Perhaps worth drawing attention to the lines on the screen here. So the little dotted line, the little dotted green line at the top here, that represents the current market price. The more solid green line at the bottom is the average purchase price, and the difference between the two is basically profit or loss, and in this case it's profit because it's represented in green. So I just thought I would point that out because I suspect that in the not too distant future that green line is going to fall off the bottom of the screen. but no doubt if you zoom out it would still remain visible. For historical purposes, let's zoom out and go back as far as 2020, and just a reminder that this shoot at the bottom left here, the red downward trend, that was the COVID effect. That was replaced some months later by a return to where prices had been, or at least where the market had been, and continued quite nicely up until the start of the Ukraine conflict. Then there was a little bit of uncertainty, well, quite a bit of uncertainty to begin with. It became a little less uncertain as time went on, and then the market continued its usual trend upwards up until February 25 roughly, and I think that was this shoot here was due to the tariffs announcements by Donald Trump, basically announcing he was going to slap tariffs on virtually everybody that he was trading with. Then people rushed to renegotiate their trade agreements, and we saw the subsequent V-shaped recovery back up to where things had been before, roughly about 6 months later. And since that time, I would say we've seen fairly normal market activity, a sort of a period of fairly stable continuation, a little pullback. I probably called that a correction at the time, but then the market took off once again. And as you can see, despite the fact of a little bit of a hesitation or a pullback in recent times, things appear to be heading upwards yet again. So that is where things are sitting at the current time. I stream weekly, usually near the start of the week, if work allows. I'm still working. And if you're interested in following the journey, you might want to subscribe to the channel. If you particularly liked this episode, why not give it a thumbs up? And beyond that, if you have any comments, criticisms, or indeed suggestions, please leave those beneath the video and I'll attempt to read them in due course. But with that said, that is it for this week. Thanks for watching and hope to see you again next week. Bye for now.
Woke up one morning, saw the world in a new light. No more 9 to 5, I'm living my own fight. I got a plan that's simple, a number game to play. It's the freedom that I'm chasing, I'm walking away. They said it's impossible, just a dream so far, but I've learned to count the cost. Now I'm driving my own car. I don't need a mansion, don't need a fancy name. I've got peace of mind and I'm free from the daily grind shame. It's not magic, it's maths, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking bright. No more working for a paycheck, I'm free to take flight. It's not magic, it's maths, it's the way I live. Financial freedom's waiting, with all that I can give. I cut back on the clutter, I got my spending in check, investing in my future, no time for regret. The years go by faster, my money's working too. I got a plan that's steady and it's seeing me through. They said I couldn't do it, said it wouldn't last, but I'm retiring early, leaving all that stress in the past. I'm building my empire, brick by brick. The math's all adding up and it's working real quick. It's not magic, it's math, it's a clear-cut path. Building wealth day by day, it's all about the craft. I've got my numbers straight, my future's looking paths and it's mine to take. A life of freedom, no more decisions to make.